Trump's campaign promises, from tariffs to mass deportations, tax cuts, and deregulation, and his picks to lead federal agencies suggest both risks and rewards for various investment sectors. In this video, I'm going to show you where the wealthiest investors are investing or how they're investing, and then what a Trump economy is going to look like so that you can make the best decisions for your portfolio so we can all make a good amount of money in this year, 2025. Trump is planning 100 executive orders starting day one on border deportations and other priorities. With all this change coming our way, along with the Fed continuing to watch CPI data and inflation reports to possibly cut the rates a couple times in 2025, and with AI, crypto, and other hot sectors booming, we need to know how to invest. Even Warren Buffett is setting himself and Berkshire Hathaway up for success. Many have wondered why he's pulled so much money out of his investing portfolio and stashed up a huge cash pile. I believe it's because he has some huge buys in store, especially later on this year once we see what the Trump administration is actually going to do and the direction that they're going to actually head down.
Find it all under current conditions, building the cash position. I think when I look at the alternative of what's available in the equity markets and I look at the composition of what's going on in the world, we find it quite attractive.
Now remember too, Warren Buffett doesn't literally just have his money sitting off in cash off to the side. He has it in short-term bonds and cash equivalents. In this graphic, by new money, it shows that from Q3 of 2023 to Q3 of 2024, the stock went down considerably at Berkshire Hathaway, but the Treasury's position has gone up immensely. More than anything else, Buffett loves a deal. Right now, it's not that there's nothing to invest in, it's just that the deals that Warren Buffett normally likes to go for just aren't as juicy right now. So him and many other very wealthy individuals are storing money in short-term bonds that have very low risk and actually have a very high yield, especially right now.
We've had 125 billion or so in very short-term investments, and believe it or not that long ago, we were getting 4 basis points, which is next to nothing on that 125 billion, which means we were getting 50 million a year. And now the same money the other day or day before yesterday, we actually bought 3 billion of bills at a 5.92 bond equivalent yield. So we will have what produced us not that long ago on a 12-month basis was producing 50 million a year, producing something in the area of 5 billion a year. So
it just made too much sense for Warren Buffett to take advantage of these rates when they're at their highest, like right now, because soon the Fed's going to be bringing down that rate, and over the next year, maybe 2 years, depending on how slow they do it, that rate's going to come down considerably, and eventually that's going to hit the short-term bonds as well, and so that percentage isn't going to be as favorable. When that happens, he and other rich individuals are going to have to look to deploy that cash somewhere else. And that's definitely what he's looking to do. He isn't sitting out of the market scared, he's looking for that next opportunity, and when it happens, he's going to pounce on it. Now there are certain sectors that are supposed to do very well under Trump. He's been very outspoken about a couple things that he wants to implement and that he wants to double down on. But let's look at the last 4 presidencies and see which sectors have done well under which presidents. We have Bush, Obama, Trump, and Biden, and the corresponding colors here. It's very interesting to see that the certain sectors did very well under certain presidents, and definitely keep in mind that pale blue color, which was Trump's last presidency, because things like healthcare, consumer discretionary, and information technology all skyrocketed last time. But sometimes the sectors that are supposed to do well or do very poorly actually flip-flop and do the opposite. For example, the energy sector was down 8.4% during Trump's first administration, despite deregulation, record oil production, and a rise in oil prices. Yet the energy sector climbed 22.9% under Biden, despite the administration's push for renewables and sustainability. That being said, I do think that the energy sector is definitely one that we want to keep an eye on, and one that I think is going to do very well over this whole presidency. Trump might act on the campaign threat to repeal the Inflation Reduction Act, a law enacted under Biden that includes clean energy incentives. He wants to drill for more oil and make there be more supply, which should lower gas and oil prices, which is a good thing, but this could also take away from the profit of the oil companies and so the stocks may see less of a gain in general. We'll have to see what they actually do here, but again, this is definitely one to keep an eye on. Next is the technology sector, and pretty much everyone has their eye on this one, but I definitely want to caution you on a couple of things. Trump's threatening some massive tariffs. The cost of raw materials for a lot of these companies in the Magnificent Seven will go up a lot if the tariffs are substantial. AI does seem like something that Trump wants to get behind and make sure that the United States becomes the front runner in the world as far as AI is concerned and technology is concerned. But right now, technology is definitely some of the most expensive stocks out on the market, with those PE ratios just in crazy territory. Technology also dominates indexes like the S&P 500 and the NASDAQ 100. The gains have been amazing over the past couple of years, but we have to expect a bit of a correction coming soon. And since they do dominate most of the indexes that you're invested in, or they're just part of the individual stocks that you have, just expect to see your portfolio drop a bit if you don't have things that are outside the technology sector or in value possibly, something like SCHD or VYM, something that I definitely recommend, especially as a part of the 3-fund portfolio strategy. I've been saying it for a while, but don't be surprised if soon value overtakes everything and we flip the market and that becomes the norm. The next one is crypto. Trump's incredibly bullish on Bitcoin and wants to be the world leader in this space. He's already launched a crypto platform, World Liberty Financial, that'll encourage the use of digital coins. With the launch of the Bitcoin ETFs and much more buzz about Bitcoin in general, along with it hitting over $100,000 last year, I could see Bitcoin and the world of cryptocurrency growing a lot. The issue up until this point is that big institutional investors and institutional money doesn't want to go into something that's way too risky and that they could possibly get the rug pulled out from underneath them. So what they need in the space is a little bit more regulation or rules and just a lot more utility and adoption. And so I think that Trump's going to bring all of those things because he wants to definitely be the world leader as far as Bitcoin is concerned. For those of us that are investing in it right now, this is the smartest time to do so because as soon as that institutional money does come in, that's when it's really going to skyrocket. And now the last industry that many people expect to soar during this Trump presidency is one in the world of financials and specifically banking. Trump's first administration eased certain regulation for banking rules, fintech firms, and financial startups. Likewise, Trump's second term is expected to usher in lighter financial regulations. That may help bolster profitability in the sector and therefore stock prices. Less regulation, combined with the prospect that interest rates could stay higher, will provide a net positive for the bank industry, since banks may be able to lend out more risk-based capital. I do believe that markets are going to be reacting favorably over these first couple weeks of Trump's presidency. I also think that it's going to be quite volatile because this new presidency is going to have a whole new administration, whole new way of doing things, and actually flipping and changing a lot of what was happening over the last 4 years. So with that, there's going to be some market turbulence, and so the best way to be investing is to pick a broad style index or ETF and just be dollar cost averaging like normal. It's very hard and almost impossible to actually time the bottom, and so we don't know if there's going to be a big drop, and if so, how big of a drop. The best way to do it would just be that every time that you get paid, you throw a little bit of money into the ETFs that you believe in. To learn more on the best 3 ETF portfolio on the planet, super simple, and it has just about everything that I talked about in this video all baked in, watch this video here. Or watch this video to keep you going strong in your investing journey, and remember to keep investing simplified.